What's up, everybody? Let's just 1 second here. Let me throw a tweet out there real quick. Get this started. Hope everybody's doing all right. Hope you guys are having a great end of your holiday weekend, right? So I know I had my kids home all last week from school. I know a lot of other people did as well. All right, 1 second, almost done. All right, got the tweet, copy the link. All right, how's everybody? What's up, Adele? Josh, what's up, man? Unfortunately, our football team is playing during the Sunday prep right now, so I know we're up 7-0 at the moment, playing against the Rams. I am not. It's not on any of my screens right now, so I promise to try to not stay distracted. But if I keep it short and sweet today, you'll know why, right? What's up, Campbell? Nice. First time doing the Sunday prep with us live. What's up, Sunil? Chad, how are you guys? Jordan, what's up? I see you guys. We're gonna switch it up a little bit today. Instead of doing like an introduction talk where I'll talk about something like just very broad or general in terms of trading, we'll do the disclaimer. We'll get right into the broader market, and then the prep, and then I want you guys to kind of throw some questions into the live chat, and I'll see if any of them are something that I can expand upon, and we'll just try to answer some questions that will hopefully guide the conversation in a direction of something that is more general in terms of trading. Hope that makes sense. We'll start here in just a few minutes. Always get on live about 5 minutes early just so people can have time to come in, get situated, and we'll kick off at 5 p.m. market time. Hopefully everybody had a great Thanksgiving, and even if you're not from America, right, you don't have to have a holiday to be thankful or grateful. So make sure you guys are taking these opportunities to let the people in your life that matter know they matter, and surrounding yourself with your loved ones and friends and family, guys. What's up, Ragu Gambino? I like that name. Did everybody do turkey? Did everybody do turkey for their Thanksgiving meal? Our household did not. We did lobster rolls. My wife is from Boston, so it made her smile. Oh, nice. Prime rib. That sounds good. Especially smoked. All right, guys, let's get this started. As always, just real quick, a little housekeeping. If you don't have a broker you can trust, Cobra is who I recommend. They're hands down my favorite broker, and I've used them all. They have a Black Friday special. I believe it's still valid, right? So if you use the link in my description of this video, you can get the Black Friday deal through there, and even when the Black Friday deal ends, you will still also have my personal deal, which is 25% off your commissions, right? So check them out if you don't have a really, really good broker you can trust already. Spikeet, these guys make a platform that I use a lot in order to backtest edges that I think I find in the market. Also, I use it as a way to create special scanners for myself. There's a link in the description for them as well. Scriptstotrade, check these guys out. They make tools for Thinkorswim and TradingVue. They sell a subscription-based package which allows you access to, I believe, 13 tools in their suite. And if they don't have a tool that you have thought of that you would like to create, reach out to them. They will work with you to make anything you can imagine a reality. These guys are amazing to work with. Check them out. TraderVue. If you guys aren't tracking your performance metrics, you're playing yourself. This is who I use. Remember, if you only have 100 trades or less per month, you can use this platform for free. There is subscription-based services as well, which come with more bells and whistles and some really cool tools to give you some really nice insights into your performance. There's a link in the description for them as well. There is some earnings this week now that we have ourselves a full week ahead of us. Quite a few good names in here, so it should be an interesting week ahead of us. None of the names I'll discuss today on my prep are reporting this week, so you don't have to worry about that, but make sure you familiarize yourself with who is reporting, because it's your job to know, right? Don't get blindsided. And last but not least, guys, our own TrueTrader Black Friday deal. Please check this out. This is, if you've been on the fence about joining TrueTrader, this is the best time of the year you will ever find to try us out. This will run till the end of November 30th. Check it out. I'm telling you guys, you're playing yourself if you're not over there. And if you're watching these Sunday preps and you don't understand some of the concepts I'm talking about, you know, we expand upon them and get into the nuances of that stuff in the community, right? So I only have about 45 minutes to an hour to spend with you guys every Sunday. It's not near enough time to really walk you through every single aspect of what we feel like creates a good trading plan. That being said, I still feel like I try to provide quite a bit of value for free to you guys here. So thumbs up on the like button if you do like what we're doing over here on the Sunday preps. Leave some comments in the video so that I know if you like what we're doing or if there's some things you would like to see change, right? I'm always open to feedback, guys. All right. Neither I, TrueTrader, or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only. All right, we got that out of the way. Let me move a few things off my main screen here so I can see my charts. Right now, you are looking at the ES weekly chart, okay? Let's start with the monthly real fast, okay? This is going to be the last week of this monthly candle. In fact, today is the 27th. Let's see. So we will actually be, Friday is the 2nd of December. So we will get the beginning of that new monthly candle starting Thursday and Friday. Why is that important? Well, because we've already made the bar break up on the monthly candle, right? So the next phase of the process of what the author is going to do is going to depend on, do we take out November's lows or do we continue higher and take out November's highs first? If we come back and take out November's lows but don't take out October's, we do have the beginning of what possibly could be our first higher low on the monthly time frame. Remember, in order for a bear market to end, the time frames, even the higher ones, like this monthly chart, need to begin to make higher lows and higher highs. We can't have the market reverse if the opposite remains true. As long as we keep making lower highs and lower lows, you know, I don't care what the daily chart's doing, because the bigger picture is still to the downside, right? And we are still in an objectively black and white downtrend when it comes to the monthly chart. So what I would like to see happen, and what we've talked about, you know, I think may happen, is a narrowing of the range and a base to be built, right? Oftentimes, big moves up and big moves down do need time to digest, do need bases to be built in order for a substantial push to be made in either direction, up or down, right? So what could happen from here, I want to just kind of draw it for you. If we take out November's lows, but don't take out these October lows down here, right? That's where you could get this higher low here, and then we would push. And then if we do that, the break of November's highs becomes the long trigger. And at that point, you know, even the higher time frame, the monthly chart, is showing you that it is trying to now go higher after having quite a while of just pulling back and correcting, right? So that would be the first steps in ending the bear market. And if this happens, then my whole outlook on where we're at in the market changes. My game plan moving forward changes in terms of, because I'm in a lot of cash in my long-term accounts, and I know a lot of other people are too. I've been telling people since this whole bear market started, the one thing you don't want to do is be trying to guess bottoms. You don't want you don't want to be the guy that's trying to buy this the whole way down. There's no reason to. You can just let the trend tell you when it's trying to reverse. Once we get a higher low on the monthly time frame, we have the ability down here to what we talked about a few weeks back was the ability to maybe anticipate, right? Because you get a better risk reward, but you also have to be prepared to be wrong more often. If you don't want to anticipate, then you need to wait for the higher low to be put in, and then you need to wait for the confirmation of the higher low, which would be the break of November's highs. Because we obviously don't know that this is going to be a higher low until we then go and push above those highs. Is what it is, right? Do you prefer to have a higher win rate and more confirmation before putting on trades, or do you like to have a lower win rate but have that really high risk reward asymmetric trade, right? No right or wrong, just personal preference. Keep in mind, if this scenario plays out, you don't have to buy equities, or even if you want to buy indexes, right? Indices, you don't have to buy it on the break. You could wait for confirmation, and then we could just start buying dips. Buying dips as long as we never take out the lows, because in order for the uptrend to continue, we must continue to make higher lows and higher highs, just like we did for the last 13 years in that really long bull market we just had. Yeah, so that is all I wanted to talk about on the monthly time frame. Let me get rid of all these drawings. Let's look into the weekly here. So weekly still has not had an attempt to go lower since the push up from these recent lows, right? I know a lot of people would look at something like this candle and say, well, that looks like an attempt to go lower, but it never had a short continuation trigger. It never had what needs to happen in order to show us that the bears really did come in and make an attempt. If you don't know what that looks like, these yellow arrow or yellow circles that highlight the lower highs after the pushes up into the weekly 20, that's what those were, right? That's why they're still highlighted. So in order for the author to try to come lower, first thing that needs to happen is a push into this 20, put in this lower high, pull back, intermediate lower high compared to this one, and then the break of this level here. That's what should take you back to lows and continue lower. We have not had that happen over here. So that's the first thing I'm looking for to happen on the weekly time frame. And so first thing that would need to happen is a break of last week's lows. And then, this is going to take a few weeks to develop, right? This isn't something that can happen this week. But if we were to break last week's lows this week, and then next week try to push up again, take out this week's highs, but not make a new high, then we could have that lower high right here, and we could come and trigger, and we could try to go lower. If that happens, that is what would need to happen in order to go back to that monthly chart and see the attempt at putting in a higher low on a monthly time frame. I can't emphasize enough the importance of understanding how you need to understand how these time frames work together. Again, this is another one of those things where, like, if you guys are feeling confused or lost right now, you got to go check out TrueTrader, because that's the kind of stuff that I'm hammering into the members' heads every single day, is understanding how to read trends, how to read what one time frame is saying and what that time frame is creating on the next time frame. So let's get into the actual levels. I mean, real quick, we'll look at the daily. Daily still in an uptrend, right? We made these lows, and ever since we reclaimed the 20-day, it's just been higher highs, higher lows, higher highs, higher lows. So it's just trending fine. But just remember, it's a lower time frame pulling back to a higher time frame's downtrend. Just like if you were looking at a 1-minute chart spiking up, but if you're looking at an hourly chart, the hourly chart's in a downtrend, right? You probably want to be shorting the pop back into the trend that's in control. So you can see we have a lot of resistance ahead of us. Lots of areas where I will be looking to put shorts on if we push. That being said, there's still a lot of levels below us as well that have built in some really nice levels of support during this whole uptrend up on the daily chart. So again, coming into this week with, I would say, slightly bearish bias, but definitely ready to put money to work on day trades on the long side. Remember, day trades, not trying to put in any long-term capital for swing longs, unless you're thinking of some of the ideas we talked about. I think it was 2 weeks. Might have been 2 weeks ago. It might have been last week. I don't remember. I think it was Bristol Myers and McDonald's. But those charts, right, are almost ignorant of the fact that we're in a bear market if you look at them, and they're in sectors that are still performing okay. Anything outside of that scope, when I'm talking about these ideas, they are day trades, guys. So let's look into, let me get an hourly chart here, and we'll spot some of these levels we're going to play. So the first thing I'm looking at is this level that we talked. It's the 20-day. It's also the pullback from last week on the 17th, I guess it looks like, which held these levels almost to a T, right? So we'll call it 39.10 because that's currently where we're looking with the 20-day. Last week's weekly pivot. That's going to be the first level unless we were to gap way up. If we were to gap way up, I might actually look at last week's highs as the first level of support because that's going to line up with the 200-day. A gap up is going to put us above the 200-day. So a flush back into those levels might be playable for a bounce, but I won't get really excited about a long until we pull back to this 3,900 area with the 20-day there. Below that, the quarterly pivot is going to line up. It still lines up beautifully with this level of support that we identified quite a while back. 38.850. So it was support became resistance. Now we're back above it. So I do want to see if old resistance turns back into new support on a retest of that 38.40 to 38.50 area. Below that, probably looking at 37.50. There's the 37.10 to 37.20 area we talked about, I believe, last week. So I still like those levels as well. And then below that, obviously, we have some levels down here at 36.40 and 35.70. I don't think we're going that low this week. Again, most of the levels I'm trying to identify for you guys on the Sunday prep are for what is in play Monday and maybe Tuesday as well. Maybe Wednesday, right? But earlier in the week, because every single night at the end of the day, I'm going to go back and relook at where we ended up, where we traded, what levels held, what levels were broken through, and I will have a whole new game plan coming in Tuesday morning, Wednesday morning. You guys have to do that same thing, right? I'm only providing you guys the game plan for Sunday evening heading into Monday morning. For resistance, if we open up flat, or gap, actually, if we open up down slightly, I'm using last week's highs, previous week's highs as the first level of resistance, which lines up with the underside of the 200-day. Above that, I still like this level right here. What is this? 41, we'll call it 41.10. And above that, 41.75. And then 42.50, we'll call it. All right. So those are the levels of resistance that I'll look to play. Any kind of, remember, this needs to, even though when you look at this, especially a 1 hour chart, right? This is an uptrend, right? We go back to the daily chart. This is an uptrend. Keep in mind, don't get so sucked into these lower time frames and forget that this is a pullback to this bigger picture downtrend. Like, flip it upside down. Now, if you were a long bias only trader, does this not look like the perfect pullback to be getting long into this trend line and this support level? That's what you have to remember when you're looking at these things and you're zoomed into a 1 hour chart or even a daily chart, right? The daily chart is going to have you feeling all nice and cozy about these long positions. And if you forget for 1 second that we still are technically in a bear market, and you're buying stocks after having let's see, off the lows. Let me see how far we've come up. you know, we're 15% off the lows, and now you want to start looking for the long positions. There were times to be buying and times to be possibly getting long for 1 to 2 to 3 day swings. It ain't up here, right? And even if it is, even if what I'm saying right now turns out to be wrong, from a statistical standpoint, you know, anything can happen in the market, right? I can tell you this is not the place to be buying, and we go way higher. That's just the nature of the market. You can't look at something from an outcome-driven perspective, right? You can't look at something in hindsight and go, see, I knew it was going to go higher. You have to go, look, statistically, probably, or from a probability standpoint, this is a much less quality area to be getting long than on dips when this reversal was starting. And it's a much higher probability area to be putting on a short. And even if the short's wrong, even if you're wrong about the short, being wrong and still playing the statistics or the probabilities are two different things. You could have a 10% chance of being wrong and still be wrong, but you don't get to be upset with yourself about the fact that you had to take that loss, right? You still have to understand that even something that's right 99% of the time is going to have that 1 out of 100 times where you got to admit it just wasn't right. Same for, you know, you could have a 10% chance of being right on something. You should not take that bet, even if it turns out it was that 1 out of 10 times you were right. It's just a numbers game, guys. All right, so that was a long-winded bunch of nothing other than just trying to get you guys to think about it from a statistical standpoint, right? Because a lot of people get too caught up in the fundamentals or the macro and their ego and trying to show the market that they're smart and they're right and you're dumb and you're wrong. It's not about that. It's a numbers game, guys. Promise you that. All right, let's look at Bitcoin. There wasn't anything to really point out about the NQ. All the same things I, was just saying about the S&P can be applied to the NASDAQ. This is still a pullback to a downtrend on the higher time frames. And the levels still kind of coincide. One second. Okay, so the one thing I will say is that we could definitely still have the lower high form this week on the weekly chart here on NQ. So you have, I guess I totally tell you there's nothing to tell you about NQ, and then I'm going to tell you something. So you have this lower high here. If this week we put in a lower high here but can't break these highs, we are setting ourselves for the stage for the short continuation trigger below here on a crack after, right? Same thing we talked about on the S&P, except the fact that this one is set up already to where it could happen. We could get that intermediate lower high this week on this index. So let me look at Bitcoin real quick. Daily chart. We're right into the daily 20, guys. We have been unable to reclaim those levels lost ever since the FTX thing. Now we have this descending 20-day catching up right to us. Would not surprise me to see this cause some selling pressure and a possible short continuation trigger on the daily chart for Bitcoin, which would then, if it were to set up that way, the first target would be the lows and then a continuation and head lower. And remember, if we take out some of these lows down here, it could be quite the free fall down. I think we were looking at maybe 12.5, 12.6, if I remember correctly. Let's look. Anywhere into the 1200s or the 12,000s. But again, we'll just wait and see how it plays out. I don't trade crypto, but I do follow it, as I say this to you guys every single week. Let's take a look at the sectors real quick. We're going to do the sector analysis. This is barchart.com. Coming here to our stock market sectors. Sorry, guys, I still have a bit of this cough. Short-term matrix, and not as impressive as it was last week, if you remember. Utilities was the big one for me, and we'll take a look at that. Staples still performing, and healthcare still performing. Remember, healthcare is the one sector where I feel like it's really shaping up nice, as well as XBI, which is the biotechs. And there's a lot of charts in this sector, I think, that look healthy. Excuse the pun. But let's take a peek under the hood. Let's go into our sector ETFs and we'll go through all these. Retail starting, you know, there's a lot of charts in this sector that they're looking pretty extended. You know, you had a few of them like BBY and I think it was and it might have been Abercrombie and Fitch. Had these failed breakouts on Friday. They're not going to make the Sunday prep. I'm not sure the liquidity is going to stay there on BBY or have the range. We'll see. I may trade it. I think it was A&F. Yeah, you have these like, you know, they tried to make a continuation higher and they closed below the previous day's closing price. But some of the other ones, I'm trying to remember which names they were. Was it Lost? There's a few of them that are getting pretty extended. Anyway, let's get back to the sector here. The sector's running into resistance, but a reclaim of this 67.70 area and a hold, and you might get continuation higher. You also probably have on a lot of these individual names where you have people looking at them going, that's getting extended, right? It's probably a layup short. Might get a lot of shorts in there early. And so you might get this like blow off that if that happens, I'm going to be really excited for, because those kinds of blow offs where you get shorts in there early and they're stubborn and they all tap out, those oftentimes provide really, really great short opportunities. So I'm kind of watching this to see if they reclaim this 67.70 area and hold and get another push, because if we come up into these like 72, 73, 74 area on XRT, that's probably going to be a lot of those individual names blowing out shorts, right? We'll see though. If it can't reclaim that 67.70 area, this may end up being a lower high here, and we might just roll back over and come back into the 20-day. It is still trending really nice. All the pullbacks are making higher lows. It's pushing. It literally had the long trigger on Wednesday, and it's still attempting to resolve back up to its target, which would have been, let's see, 67.55, the highs from November 15th. So we'll see if it does resolve and hit its target and then continue higher, or does it fail to get there and then roll back over. XLF, another one, still really strong, still performing really, really well and having that relative strength. Remember, what we talked about was the inability for pullbacks to even get to the 20-day, right? All these pullbacks are just getting bought up short of the 20-day every time. It's just trending really, really strong. Now that we're above these levels, I'd like to see us blow out into this 37.30 area. If we do that, possibly even higher, right? But if we do that, there may be some really nice short setups in this sector. I still think you can be buying dips on this sector as well, as long as this uptrend stays intact and as long as you're waiting for good pullbacks to clear levels, okay? Real estate, I think it's going to really struggle with that weekly 20/annual pivot /40 round psychological level, right? So if there's names in this sector you like, that's what I'd be waiting for, is a test of that 40 area, and possibly looking to get short something in here. Again, I say this often, I just feel like it bears repeating, especially when there's possibly people watching this for the first time, is, you know, for me, I need liquidity and range to trade an individual name. There's not a ton of names that fit that criteria. And if you guys don't know, like, if you don't know what names are in the real estate sector, you can come over here to your barchart.com. You can click real estate and it'll pull up all the names, all the individual names. And what I like to do is I'll just sort it by volume. And look, the highest volume traded was 2.7 million shares on this VICI. And my baseline for average daily volume is 2 million, right? So everything else is really illiquid. You know, as far as day trading is concerned, like, I need the ability to get in, get out, and not have a giant spread between the bid and the ask for me to even be interested, right? So I could pull up the VICI chart. And let's see, average volume, you know, okay, it's trading average on average is 5 million for the 10-day. So it's probably liquid enough, right? But so then the other problem is this. What's the range? 68-cent ATR. That's not enough, right? I need something that's going to trade $1.50, maybe $2, $3, right? The wider the range, the more opportunity for me as a day trader, right? So this is something where it's like, even though this does technically meet my liquidity concerns, the range is terrible. So again, that's why like I'll talk about these sectors and let you guys know my thoughts on them and where resistance might be found. That doesn't mean there's going to be a name in this sector that I'll trade. Okay. Sorry, let me get rid of this. I have OCD, so I see something like that on my chart. I got to get rid of it. XLV, remember, this is the one that we always talk about, that 134 level, the ability to finally clear it. We've definitely cleared it. Houston, we have liftoff. But I'm not a buyer on this expansion higher. In fact, any kind of pushes higher, especially if we get one of those daily candles that's just a much wider range than what these have been this last 5 days up. We go 140 on this. I'm probably looking to short individual names in this sector, but pullbacks to 134 is the money level on dips if you want to get long for names in here. XLB, another one that's been performing well. Pullbacks held. Remember, like we were playing this as a possible short on a push up into the 78.50 area. It gapped above it, and ever since it got above, it pulled back and held it. And now we're pushing. We're back above this 82 area. Definitely keeping an eye on it. I don't think I want to be short prior to an 87 area, right? Quarterly pivots up there, 87.26. The recent highs from back then were 88. So if it can really, really get going, I think there are some names in here that I would be eyeballing for a fade. But again, there's still plenty of levels of support below, and it's performing with relative strength. So if you want to be getting long, make sure you're putting money to use in sectors where they're performing well, they have relative strength, and they're showing that institutions are coming in and buying as well. Industrial is still performing well, cleared this level. It's a bit extended. I would probably be interested in the fade if it pushes any higher, probably 103. Can just draw this line straight across. Whoops. Yeah, right up in there. Any kind of pops into that level is going to put us, good 5% above the daily 20. And it's not, these are for day trades. Any kind of parabolic move that blows out people, that's where I'm trying to hop in, take my piece, and then jump back out. Utilities. Remember, we always look at the weekly on this one. It's still right in that range. It's still right in the area where this is where there's only a few names in this sector that, just like when we went and looked at real estate, right, that have enough liquidity and enough range. But there's a few, right? So there are some names in XLU where I would be interested to see if this thing wants to give back quite a bit of this move versus Friday's high day. So, gap down, any kind of pop into the 71 area, probably looking for a fade. If it opens flat, I'd wait to see a press to the test of Friday's high day if it could get up there. And if it does, do we put in lower highs or do we clear it and start holding and try to go higher? But again, I do think I like this sector for the fade up into these levels. Staples extended. I'm looking for 77 to 77.50 for the fade. I would not be interested in buying this unless it were to pull back to the 200-day / 20-day area. Discretionary still relatively weak. Again, you're seeing all these other sectors have some really decent moves and some decent strength and some decent trends, and then you pull up something like this and it's just nothing, right? It's just not moving. Nobody is coming in and giving it that excessive buying power that it takes to move a sector. Now, does that mean, can that change? Of course it can. This could really coil up, get nice and tight, have a long trigger set up, and could get some volume and could go. Until then, I'm treating it as such, right? Relative weakness. Any kind of pops up into this 150, 149 area, probably for fades. and probably not interested in buying it. Even if we come down to the lower end of this range, like 133, still with that relative weakness, I have to just kind of hands off with the long ideas. Communication, another one, relative weakness. I will say it is holding above the 20-day after the reclaim pretty well. So you may get a press up into this weekly 20, this 52.50 area, which is where I'd probably look to fade names in this sector. Another one where I'm probably not looking to get long names there. XPI still nice and coiled, getting really tight. Remember, this one is more about just the ability for this. We've got the turn, right? We've got that higher low, higher high. The finally got a reversal after a very, very long downtrend. And what we're just trying to do is hold levels here and finally get that push that gets us out of this downtrend. I really do think the longer this holds, I mean, it's getting really tight in here. You just see all these wicks get bought up, really holding this trend line really perfectly. If it just continues to hold, I feel like you can be buying dips with very clear-cut set risk, depending on how much room you want to give it. But you know, if you want to keep it nice and tight, you would just use under last week's lows. If you want to give it a little more room and be made sure that you're taking out for good cause, you might want to just use under November 9th's low, right? So a break of that, and then you could say, okay, I was wrong, take off my trade idea and move on. But if you're buying these dips and this continues to hold and then we get that big push, there's a lot of individual names in here that could really get going. Tech, you know, had a nice big move up, but ever since this big move up, it's just kind of trying to hold this level and getting nice and tight in here. But again, you know, all these other sectors had some pretty good follow through, so the relative strength hasn't really been here. But I do think it's getting nice and tight and could make a move soon. Again, just like we talked about with the S&P and NASDAQ, keep in mind that even though you're looking at an uptrend on the smaller time frames, on the larger time frames, right, this can be looked at as a pullback to the downtrend. So just make sure you guys don't ever lose sight of that, okay? And energy and oil, still, you know, again, I still think the uptrends are very much intact. There's nothing here to short, but at the same time, I'm not a buyer unless we pull back to the weekly 20 on either sector. So you can see we still have quite a bit of ways to come in for me if I were to look to get long this sector. And now, for day trades, any kind of flushes to recent levels of support, right? So like, let's say Monday morning off the open, I see CVX and XOM and BTU and a bunch of oil names all hitting the scanner and flushing emotionally. And this is kind of coming down right into last week's lows, which is off that monthly pivot. There very well may be day trades on the long side in oil, right? I'm talking about when I say the weekly 20, those bigger picture pullbacks, that's when I start to look for the 1 to 2 to 3 day swings on the long side in the sector, right? So you always got to remember that, like, it's very important when somebody's talking to you about a trade idea that you understand their time frame. If you don't, you guys could completely disagree because you're not talking about the same time frames, and both of you could be right? One person might be short bias, one might be long, but one person's talking about a day trade, the other person's talking about a 3 or 4 day swing. You both could be right, and you're just having this miscommunication because you don't understand the time frames you're talking about. So make sure you guys understand that. And that's not just when you're listening to me talk, that's anybody that's giving any sort of opinion on the market. All right, so that is the sector analysis. We're going to jump right into the long setups. The strong stocks looking for continuation. First name on my list, AA, 44.50 to 44.60 for a scoop. I just think that it's holding really well after a reclaim. You know, I think got a lot of consolidation, pop, pullback, more consolidation. So I'm just looking for a quick little flush right down into the 20-day, right into, was it Tuesday's lows for a hold. And that would be a quick day trade bounce play, looking for a flush on AA into 44.50 to 44.60. And I'm going to kind of try to move through these pretty quickly, guys, and then we'll get to the questions where hopefully we can have a dialogue about broader topics. In the next idea, NVIDIA. A lot of the chip stocks started to look really strong the last few weeks, and NVIDIA, you know, you can pick your poison, right? There's quite a few of them, and they all kind of have this. MU looks really tight. MU over 60 should go. The way it's just hugging this 20-day. But for me personally, for day trading, I really like this NVIDIA off this 157.50 area. Let's see if we can. So here's your 5-minute. It's the annual / monthly pivot, both of them. And you know, we just, what was this? Wednesday? So Wednesday we had this big rip, ran into there, kind of looked like it was going to be resistance, reclaimed, held. Pulled back again, held. Have not retested it since. You know, this thing has, let's see what the range is on this. 7-point range. We closed at 162. So a 7-point flush off the open is going to put us, you know, actually it's going to put us a little past that, but I really like that level. We'll see if we even get the flush, because like I said, there's been a lot of strength in that sector, but I am willing to scoop NVIDIA on an emotional flush off that 157.50 area Monday morning. The next idea is Boeing. 175 is what I'm looking for an entry. You'll notice, so we just had this flag up here, right? That's kind of what I was just looking at. Just got this flag built. Basically a retest of that flag and these recent highs, which you can see it was building right there. See all those highs? So a retest of that. 175 is a round psychological level. It would be a 3-point flush as long as we don't gap down, right? So a 3-point flush on this stock is definitely going to get me involved, especially right into that round psychological level. Next idea is SE. I just want this over Thursday's highs. You'll see I have an alert set. Looks a lot like that MU chart, right? Well, I'll compare it to MU in a second, but we've had the pullback. We held this level here. It was the monthly pivot. It was also kind of the break above these levels that we had to clear. Cleared them on earnings, pulled back, held. Now we've pushed up, made a higher low. We won't know that's a higher low until what happens? Until we break above Thursday's highs. If we break above Thursday's highs, I want to be joining trend on dips. That's the idea there. Again, looks a lot like MU, right? Except MU needs to break above this level here to have the exact same trigger, okay? And that's it for strong stocks looking for continuation. It's also the end of the long setups because there was nothing in the oversold reversion setup category that really grabbed my attention. So moving on, we're going into the short setups. This is weak stocks looking for continuation. First name on my list is Coin. I'm looking for a parabolic pop into 51 for the fade. You got 51.30 the monthly pivot. I just feel like if it doesn't happen Monday, here's the other thing. If this doesn't happen on Monday and we come a little lower, a day or two later, it's going to line up perfectly with that 20-day. And there's, trust me, if I can't get it off 51, or maybe we slam into 50 and 50 stuffs, I will look to play this maybe a little early. I may jump in front of it if we just spike 44 straight to 50 off the open on Monday. I'll probably put the fade on right off that psychological level. And remember, I have no problem stopping out and revisiting higher because there's so many levels higher to play this, right? Stop out at 50. I'll be right there into the 53 area where that 20-day is, and also this level here that we've had from a few weeks back, right? So just multiple levels to play here on Coin. I'm very bearish. I still think there's a lot of negative sentiment out there on this, and people are, every pop is sold off. So anybody that's buying the pops and holding, thinking that they're picking a bottom, they're all upside down in red, unrealized red on these. So retest of those levels should offer really, really good fade opportunities, especially on the pops that are emotional. Remember, that's where a lot of my edge comes from, is making sure that the move into the level I'm telling you about is an emotional move. I'm not looking for something to just grind up into, this goes from 44 to 50, but it does it over the course of an hour and a half and just grinds up there, I'm not interested in it at all. Okay, so that's coin. Next idea is NVAX. And you'll remember this was something I was bullish on a few weeks back when it was just holding this trend line. The fact that we couldn't hold some very key levels makes me think that this is a big short on any kind of spike right back into the underside of that trend line that it broke. So I'm looking, what did I write down? The 20-day / 50-day is what I want. Yeah, so 20, basically $20. One thing that will maybe keep me out of the trade is if it's not trading a lot of volume that day, right? Like if it's trading 4 or 5 million shares that day, and you know, the opening 30 minutes of the morning is where a good chunk of that volume exchanges, it'll be liquid enough for me to get in there and get out. But if it's going to put in like a 2 million or a 1.5 million share day, you'll know it during the first 30 minutes because the 1 minute candles are just not going to have the volume, right? So if the volume's there, maybe there's a headline, who knows, it is a biotech. There's always biotech headlines left and right. So if there's a headline or a PR or something, maybe we'll get that extra liquidity and the trade will be phenomenal. If it's low liquidity, I'm probably just going to be hands off. The next idea is Roblox. Same level from last Sunday prep. It just never got there. This alert is still set, right? So 33.83, and above that, I'd still look at 34.85-ish to 35. Both levels very playable in my opinion. Just need to get a parabolic type move off the open right into those key levels. Next idea is PayPal. 86 for the fade. You can just see we had that pullback consolidation. We really sold off, and now we haven't retested. So anything up into the underside of the 50-day, you got the quarterly and the monthly pivot right there. I'll look at a daily here for you too, so you can see it. But yeah, any kind of push up into the underside of the 50-day, I want to be there for the fade. And I think we might get it, right? You notice you get this big old reversal candle here on November 4th, and we get this big move up. Well, got that on Wednesday as well. So I'm thinking we may get a move back up into those levels. So I want to be prepared. 85.70 to 86. That's kind of the level on PayPal. Next idea is RIVN. Again, another one. Same idea as last week. Same levels. Okay, 32.80. We just never retested it. I still want to be fading it up into those levels. Tesla. And this is, again, remember, RIVN and Tesla, same sector, same business model. Maybe you just pick one or the other depending on what price range you prefer to trade or whatever. But I think the 198 to /200 area where you have this descending 200-day, I'm not really, honestly, I think people are really bearish on Tesla, and possibly rightfully so, right? But this could easily turn into one of these failed breakdowns, and this could, push up into the underside of the 20-day, pull back, make a higher low, and then we might get a bigger move up. And that still doesn't really negate the bear thesis for the people that are thinking longer term. I think when you really, really zoom out on Tesla, this chart's hideous, right? Like it's holding on by a thread. So there, I think there's a lot of credence to the bear thesis, but I also think that a lot of times people are just early. I think any kind of pop into 200 is going to be a good fade for a day trade, but I would also possibly look to flip to the long side if it slams up there, gives us that day trade, and then pulls back and starts holding some levels, because I feel like this could get a secondary leg higher if this just turns into one of these failed breakdowns. Okay. So that's Tesla. The last idea in this weak stocks looking for continuation is ZM. 80 for the short. Right into the underside of the 20-day / this little breakdown area from the earnings. Basically a gap fill, right? Monthly pivot, 20-day. The gap down, I think you possibly still have people bagged up there. Very simple, straightforward, easy looking day trade if I can get that pop. All right. Overbought reversion setups. IBM. A lot of these you're going to be familiar with, right? We've talked about this. Still the higher the better. you might, the turn might be in. You get these 2 days in a row where you have, you know, kind of a, Thursday was kind of a failed breakout, and Friday was, you know, wasn't any prettier. So we may be putting in a near-term top here before it comes back and retest that 145 to 146 area. So basically, yeah, I am looking to fade this versus last week's highs. If it doesn't work, that's fine. There's levels higher that I'll look to play it because I do still think it's getting extended. But I'm basically looking at Thursday's highs, the highs to use as my risk level. And that 150 psychological round level should help us a bit here. GILD, Gilead. I am still stalking this. You know, we pushed into the levels where I was watching it. We are through it. But I just think, you know, maybe it's got one more last hurrah, a blowout into 90. I can't say this enough, guys. This setup, overbought reversion setups, the higher the better. And I know people will be like, well, you just say that so it covers your ass. But it's true. It's like you really do want to see these get exhausted. You want to see them get so freaking out of whack from what fair value is that you're giving yourself the best opportunity to be right, because you can be wrong, you know, 7 out of 10 times on these setups, but those 3 out of 10 that work, the risk reward on these is so phenomenal, because when you catch those tops and these really do roll over, they really roll over. So I'm stalking this. I hope we get a blowout into 90. We'll see. Next idea is Oracle, 8450 to 85. That one, you know, it's definitely not my typical what I would consider overbought, but I really do like that level. You can just see how key that level was. We have not retested it since back in April. So any kind of spike up into that level, I'll be looking to fade Oracle. And last but not least, Walmart. 156 is the first level of interest. That's that annual pivot. You know, anything up the high, again, the higher the better. Anything into this 160 area is really gonna have my attention. Not the most liquid name, but I'm hoping we can get just some sort of blow off up into these levels. But I do want to keep Walmart on my watch. Remember what we said about XRT, right? XRT may, you know, reclaim this 6770 area, start to hold and get another leg, and we may get that blowout in some of the retail names. So don't write Walmart off. Keep an eye on like all the other retailers. This one actually looks really nice. Like I could see this blowing off into the 37 area for a big fade on Kohl's. AEO is one of them, I think. Yeah, AEO is getting a bit extended. BBY, there's a few, but I think if they catch shorts off guard, they're early, we might get that secondary blow off where that's our opportunity to come in and let the early shorts out and make our coin and move on. So that is the whole prep. I'm gonna see, let's see here if there's some questions. All right, let's see here. Robert Smith says, Ricky, the overall market posture review is perfect as it is, as it sets the stage for what may occur during the week. Keep this up. All right, thank you. I appreciate that. Yeah. From Campbell, fade means that the current trend is reversing or slowing. When I say fade something, I just mean short it. I mean, I guess you could say that it just means to take the reversal, but for me, like if you hear me say fade, it means short. If you hear me say scoop, it means get long. CRM Grandizer says CRM for a long diamond formation on the 4-hour chart. I know CRM reports this week, so make sure you know that. You know, and like as far as things like these diamond formations and head and shoulders and you know, pennants and trend line, even trend lines, right? Like you'll hear me say this all the time. Those things matter so much less to me than actual trends, right? So for me, the only way I can look at something is to say, what's the trend? Right now, CRM is just in this perfectly controlled downtrend on all pushes up to the underside of the weekly 20, right? So, you know, over 166, and maybe I would be bullish and look to get long on dips, but it could just as easily here, you know, have bad earnings and come down and lose 136 and just get a whole nother big leg down. But again, keep in mind, you got to know that these guys are reporting. Let's see, it should say it here, Wednesday, okay? And it is, does this mean, yeah, after the bell. So don't get blindsided by it. And it's day tradable, right? Like it's got a $6 ATR, trades, what, 6 million shares per day on average. So there's day trades in there, but I have zero bias on it at all. I would fade any kind of emotional spike into 160, and I would buy any kind of emotional flush down into 145s for day trades. But again, like looking at some sort of geometric pattern and just saying like, oh, I see a diamond pattern on the 4 hour. Like, we can go look at a 4 hour chart. And I mean, you know, anybody, I bet you could have 10 different technical analysis guys look at this, and 10 different dudes will tell you a different thing they're seeing. The one thing that we can objectively talk about is the trend. On every single time frame, right? So, you know, currently on this 1 hour chart, it's in an uptrend, but remember, it's pulling back to a higher time frame downtrend. And even on the daily chart is very just chop, right? Push up, new lows, but then immediately reclaim. Now we push back up, but make a lower high and then a higher low. So technically it's just kind of coiling and getting tighter. And that makes a lot of sense because it's going into the numbers, right? A lot of people don't want to get off sides heading into a binary event. All right, let's see. Z Infinite says BA is a leader in this rally. Yes, BA's been beautiful. In fact, BA had a short trigger. Okay, let me show you. And here's what I like about BA. So, you know, I'll read a trend all day long and just try to stay objective, right? So here was your, right here was your lower high. And the break at this level here was your trigger to get back to the 20-day. But ever since that triggered, right, we've come back in, did not have any follow through to the downside whatsoever, and have immediately pushed back up, made a higher low here, and now we have a reversal triggering, right? Like we can literally see this right here. Here's your higher low. This was the trigger over 175.22-ish, I think. Let's see, 175.19. So we triggered, and so it's trying to get back to these highs, which means we have an unresolved target to get to, which is exactly why I want to be a buyer if we flush early Monday morning back into 175, because I do think we are going to get back up into this 180 area and possibly get another leg higher. Okay, but yeah, I 100% agree with him saying that it's been a leader in this rally. It definitely has. Cook says, when looking at gap fills, do you generally use the wick or the body of candles? So Meta is the one that, you know, had a lot of gaps to fill from way back. I'm using wicks. I want to see the price come and actually fill just to where that gap was, right? And a wick shows that it did trade up into those levels. I mean, the body is just showing you open and close. So you see all these were all gaps that Meta had to fill long before they changed their name to Meta. This was Facebook days. They had these gaps, and all of them filled. All of them and then some, right? So you can see how I had them drawn. They're through to the wicks. And I'm sorry that this is just the first name that pops to the top of my head when I think of gap fills, because I had so many of them marked. But I do use the wicks. Let's see. Z Infinite says, what is your read on solar sector? It's still strong. You know, this is really productive price action. Any kind of parabolic push up into these highs, I'd probably be looking to fade. But I still think pullbacks to the 20-day are great dip buy opportunities. You know, a lot of the leaders have been here, right? Like FSLR has just been insanely strong. I'm still stalking it for a fade on a day trade. I think we talked about it last week. It's not on the prep this week, but it's still on my watch every single week. The liquidity is the one thing that's not my favorite thing about FSLR. But if you catch it in the first 30 minutes of the morning, you usually get plenty of liquidity to get in and out. SPWR was another one where, you know, the pop up into the underside of this was what I wanted to fade. Got that fade, but ever since it hit there, pullbacks just making higher lows, and now it's trying to break out. Just a lot of names that look really good in this sector. So yeah, I think the sector looks good as far in terms of my sentiment, right? I think the trend is intact. I think it's had relative strength. And if I wanted to be biased on it, it would be to the long side. But I still do think that offers really good opportunities both ways if you wait for price to dislocate. Steve says, how do you think China's protests may help the market? You know, like, it obviously affects a lot of the Chinese names or any names that have exposure to China, like WIN or LVS. Like actually, I think MGM has exposure out there in Macau. But in terms of, you know, the broader market, and here's the thing is like, this is where my favorite thing to say comes straight to the top of my head, and that is, I do not know. I think that you could have an opinion, but I think I would make sure you hold it loosely and not get too stubborn, because really, I don't think anybody knows, at least for certain. Nobody can tell you for certain. What I would say is just read the trend. Let the market tell you. Just follow the price. We don't have to have a crystal ball at all. And I say that about every issue that anybody ever brings up, whether it's, you know, the Russia stuff or oil embargoes and things with Saudi Arabia or anything, right? Like the best thing for me is to just remember that I don't know shit about shit, and just do what the price is telling me. Don't try to outsmart the market. Few events to be aware. Sunil saying few events to be aware of this week. Wednesday afternoon, Powell speaks. Thursday, Friday morning, PCE and NFP might bring in some volume. Yep, agree. Josh, thanks for another amazing prep, Reggie. Appreciate you working so hard. Go Chiefs. Yeah, are our Chiefs still winning right now? If that's all the questions, guys, I will actually go ahead and wrap up because, like Josh is pointing out, I would love to go put the football game on and watch my team. So thank you for joining us. Remember, guys, Black Friday deal still going till the end of the 30th. Check us out. If you don't know what I'm talking about when I talk about reading trends, you need to, because it's the most important fundamental building block to you having the ability to stay safe in the markets. So take advantage of the Black Friday deal. If not, I'll see you in the markets on Monday. I hope it's not your money I'm taking. Take care, guys. Peace.